Hello and welcome to yet another installment of Crazy Investor Behavior. This is where I take a look at a company where the market seems to be getting it totally wrong and compare it to one of their competitors where the market is more or less right. I'm not going to say they're exactly right, but they're more or less right, and then figure out what the crazy company should be worth. Now, I have other videos in the series and some other videos related to it. Follow any of these links here. Let me just say with AMC Entertainment, what we're going to look at today is a little complicated because the numbers are so bad during the pandemic. Went through and looked at a number of years, 2018, 2019, 2020, and year to date 2021 to get a better sense of how these two companies should compare. Took some averages there, but you'll get the idea. Pause it if you need to, if you want to look at all of the financial data I give there. Won't necessarily read through all of it. So let's go ahead and start here. We have AMC, the crazy company, trading at $30 billion, right? And then we have Cinemark over here trading at $2.7 billion. That tells me the market is saying that AMC is 11.1 times as much or worth at much more than Cinemark. Now, we should see something in the financial data that tells me that this makes sense. Let's see if we do. Let's go look at the usual suspects. Okay, let's start with revenues again. So we have a number of years here. In general, we can see that revenues are higher for AMC than they are for Cinemark, and that gives me about a multiple of 1.7. So AMC should be worth about 1.7 times Cinemark, not 11. So it's not revenues. Let's go ahead and take a look at something else. Let's go to earnings. So here we are. Earnings, again, you look at 2021, 2020, for AMC, you go back to 2019 even, they're negative, right? So earnings are pretty bad. That's going to have to kind of go back further here. But if we look at this, we can kind of get a sense, well, I'm going to say that actually AMC is worth less than Cinemark because they're earning less. Even though they have the more revenues, they're earning less. This tells me AMC is only worth about half as much as Cinemark. So it's definitely not earnings that's justifying the 11 times multiple over Cinemark. Let's go ahead and look at cash flow, free cash flow here. So again, some crazy things going on during the pandemic. But if you look, AMC, even back in 2018, well, pre-pandemic, had negative free cash flow versus Cinemark, who justifiably, both of these companies had negative cash flows 2020 and this year so far. But here, wow, Cinemark looks a lot nicer. That tells me that AMC is only worth about a quarter of Cinemark. So it is definitely not free cash flow that's justifying the 11 times multiple over Cinemark. That is not what it is. Let's go and look at, well, let's look at attendance. Maybe that's what's going on here. So here we do see, AMC again has more attendance, just like they had more revenue. That tells me, AMC has some justification for being bigger than Cinemark, but only at about twice as much. So again, once again, no, it is not attendance. So I think those are kind of the usual suspects here. What we have here is really a question of bigger versus better. Okay, so if you look at AMC, it's clearly bigger. When you look at revenues and attendance, it is definitely bigger than Cinemark. But if you look at Cinemark, it's better, right? So it's taking those inferior revenues and that inferior attendance and actually getting better earnings and free cash flow than Cinemark. So you have to ask yourself, what's more important? For me as an investor, that bottom line is what really matters. I care about the cash. I care about the earnings. You can earn all you want or in terms of revenues, but if you're cost of goods sold or whatever you want it to say, if that's so high that it never trickles down to the shareholder, that is not very interesting to me. So I actually find, hey, Cinemark looks like the better company, all things equal. So what I'm going to do here, I'm giving it a price target, $1.99. Again, it's trading at 50, in the 50s, depending on when you watch this video, trading at 58 when I first put together this information. Yeah, $1.99. And the cool thing is I actually put in my spreadsheet the formulas, and that's the number that spit out. So I have a nice little graphic here because $1.99 is, of course, the favorite price for many things here in the US. This is, of course, subject to Cinemark continuing, or I should say AMC continuing not to deliver, right? To not deliver through from the revenues and the attendance down to the earnings and the cash flow. If they were able to turn that around and match, Cinemark's productivity in terms of that, or that return on investment, then we're talking about, a $9 to $10 stock for AMC, but that's still well short of that $58, 50, whatever you want to think about, depending on when you're watching this video. I also want to point out that here, I am saying the market has it wrong. This is a cognitive error. This is a problem with the market. AMC is not worth what it's trading at. You can see some other videos on cognitive errors if you watch here. Also, super important is the company. AMC is saying, dudes, you guys have it wrong. This is not an appropriate share price. You are going to lose money. This never happens. I can't think of a single other instance where a company said, you guys are crazy. You always hear, why does the market hate us? Our share price is worth more than it's being valued at. You never see this. The market is saying, you guys are crazy. With that, happy trading out there. I'm not a buyer of AMC. Thank you so much for listening. I'm Brian Kozlowski.